Tower, this is Ghost Rider requesting a flyby.
Negative, Ghost Rider. The pattern is full.
Can you fly this plane and land it?
Surely you can't be serious.
I am serious. And don't call me Shirley.
You know, it's fascinating. Most companies, when they hit a crisis, their only goal is just to survive. But every now and then, a company uses a crisis to completely reinvent itself. And that, right there, is the story of Delta Airlines. It's an incredible tale of a massive comeback that has now flown directly into a global storm. Just look at this number, negative $12.39 billion. That was Delta's net loss in 2020 when the world just stopped. I mean, that's not just a bad year, that's the kind of number that can put an airline on the ground for good.
So that's the real question, right? How in the world do you pull a company out of a nosedive that deep? This isn't just about getting back what you lost. It's about building something totally different, something you hope is a lot stronger. Or so they thought.
Well, Delta's answer was something they called the premium playbook. See, instead of chasing every single passenger and cutting costs to the bone, they decided to completely change who they were selling to. They didn't just tweak the model, they flipped the entire script.
This new playbook, it really rested on 5 big ideas. They were going to go all in on premium flyers, turn their loyalty program into an absolute cash machine, expand overseas, win back all those corporate accounts, and of course, run the tightest operation possible.
And here's where it gets really smart. That loyalty engine? Check out this number, $8.2 billion. Now that's not money from selling tickets. That's what Delta is projected to make in 2025 just from their credit card deal with American Express. It's basically a financial fortress, stable, high-profit revenue that has nothing to do with how much jet fuel costs.
Now, to really get why this strategy worked so incredibly well, you have to look at the economy it was designed for. Delta wasn't just targeting any traveler. They were aiming for a very specific person who was thriving in a very specific economic reality. They were betting everything on what's called a K-shaped recovery. You've probably heard of this. It's where after a big downturn, the wealthy just keep getting wealthier. That's the top arm of the K going up, while most other people kind of struggle or fall behind. That's the bottom arm. Delta basically decided to ignore the bottom arm of that K and focus only on the top. And wow, did that bet pay off. Look at this. An incredible 95% of Delta's revenue now comes from households earning over $100,000 a year. These are the folks who don't flinch at higher prices and want a premium experience. That is a rock-solid customer base. This laser focus led to something that has, well, never happened before in the airline business. The entire way they make money completely inverted. Check out this split. In late 2023, for the first time in history, the money Delta made from things like First Class and Comfort Plus was actually more than what they made from the main economy cabin. But it's not just that. While premium sales were soaring, up 9%, the main cabin was actually shrinking, down 7%. And believe me, this was no accident. The CEO, Ed Bastian, he put it in black and white. He said that 100% of the airline's growth, all of it, was being poured into those premium seats. They were literally making the economy cabin smaller to make more room for people willing to pay more. And the payoff? By the end of 2023, Delta hit an all-time record revenue of over $63 billion. The premium playbook was a massive success, going from a $12 billion loss to the best year in company history. I mean, it's a masterclass. But no strategy is immune to geopolitics. The world suddenly shifted. A conflict thousands of miles away sent a shockwave through the energy markets, and it hit the single biggest weak spot in Delta's otherwise genius plan. And this all happened with breathtaking speed. On February 28th, a military operation kicks off. Just days later, the critical Strait of Hormuz is pretty much closed. By March 8th, jet fuel prices had just gone through the roof. And here's the crucial part. In less than 2 weeks, the price of jet fuel, an airline's biggest variable cost, spiked by an insane 58%. It went from $2.50 a gallon to almost $4. For an airline as huge as Delta, that is a catastrophic hit to the bottom line. And here's the thing. Delta was completely exposed. You see, unlike a lot of their rivals, Delta doesn't hedge its fuel. That's just a fancy way of saying they don't buy it in advance at a fixed price. They just pay the going rate. So when a crisis chokes off a fifth of the world's oil supply, they are in the direct line of fire. The market's reaction was, as you can imagine, fast and brutal.
Investors saw this profit crunch coming from a mile away and sent Delta's stock plummeting over 16% in just a couple of weeks. That fortress they had so carefully built was suddenly looking very, very vulnerable.
Which brings us to the big dilemma for Delta right now. Is this incredible business they built a true fortress, tough enough to ride out this kind of storm? Or was it actually a house of cards, built for a calm world that maybe doesn't exist anymore?
I mean, you can see both sides so clearly. The argument for the fortress is solid. The premium strategy works, that loyalty money is a huge safety net, and their core customers are wealthy enough to keep flying. But the risks are just as stark, a nearly 60% fuel spike with no protection and a global situation that is completely unpredictable. And that's really the multi-billion-dollar question we're left with. Is this massive fuel shock just a temporary problem that a strong company can handle? Or has this crisis exposed a fatal flaw in a strategy that bet everything on premium, while maybe ignoring one of the oldest and biggest risks in the airline game? The answer is going to define the next chapter for Delta.